Welcome to the Sage Advice Podcast, transforming the way people think and work so their organizations can thrive. Well, hi, everyone, and welcome to our podcast. I'm Ed Kless, and with me today is David McFarland. David is the founder and CEO of Coterie, a technology company that uses APIs to make buying business insurance easy. Coterie meets professionals where they already are, using a data-based automation approach to remove hassle and confusion. The result is simple, reliable coverage for their businesses. Immediately prior to founding Coterie, David was the chief actuary and head of insurance product and pricing for Clearcover, a personal auto insurtech in Chicago. David is a fellow in the Casualty Actuarial Society and a member of the American Academy of Actuaries. Welcome to the Sage Advice Podcast, David McFarland.
Thanks, Ed. I appreciate you having me on.
So first off, David, why do you do what you do?
Yeah, this is going to sound a little odd. I don't think most people really think great things about insurance, especially kind of in the times we're at now. But the simple way to say it is we really believe in making insurance ubiquitous, and the way we do that is we make it easy on people. And the reason we want insurance to be widespread is probably one that's not intuitive, or people just don't think about very often. As I'll take an example from business insurance, which is what we do. With business insurance, you as a business owner, right? You're someone who has put your heart and soul into creating a business. You get up and running, things are going well, all that kind of good stuff. And in the early days, you kind of have a decision of what you want to do. You can either get insurance, or you can just risk it and say no, I'm not going to pay that monthly amount. Instead, I'm going to probably put $100,000 in a bank account just in case someone comes in and slips and falls. And both are options. But if you sit down and you really weigh those two options and you look at the pros and cons, you see that if you put that $100,000 away, you're basically going to get 0.5% interest on that. And if you decide to instead take that money out and get insurance, you're basically saying insurance company, you put that money in the bank for me, right? And then you can deploy that $100,000 to so many other things, right? You can expand your business. You can educate yourself. You can do something with your family, right? You can put that $100,000 to use in an area that's probably going to have a higher ROI, whether that's monetary or whether that's just some other type of ROI, remains to be determined. But you can do more with that. Simultaneously, when you get insurance, you have at least a little bit more comfort in operating your business, right? That $100,000 may not be sufficient, right? You probably should have had $1 million in the bank account. And I think this is the feeling that we've all felt immediately after college, or when we're on our own, and we don't really have a health insurance safety net. I've gone without insurance once, and I definitely didn't want to play basketball with anyone for fear of someone clocking me in the face and having to get stitches. And it's when we make insurance ubiquitous, when more people get insurance, we actually have much more efficient use of capital. We have people who are acting confidently and taking on the risks they want to take on, rather than these other risks that people really don't want to have to take that on themselves. And in doing so, we create better macro and microeconomic environments that lead to higher returns. So that's the real why we do what we do.
And tell me about your non-traditional approach to developing insurance products.
Yeah. So as I said, we want to make insurance ubiquitous, and specifically we focus on commercial insurance. So commercial insurance for small businesses. And the way that our thesis is how we're going to do that is, or how we are doing it is, we make it easy. We make it easy on the end customer to get our insurance. And right now that system is not easy. Small businesses basically have to print up lots of information, drive down to their independent agent. They take that information, punch it into a computer, and then they wait 2 weeks to get an insurance policy. We don't think that's how most small business owners really want to operate. Most small business owners are using tools like Sage, other accounting systems, point of sale systems, whatever it is, to operate their business fairly efficiently. And why can't insurance utilize that same data that's already in those systems to make getting insurance just as simple, right? Like the information you're giving to your agent is stuff like payroll, revenue, right? Employee counts, like all of that stuff exists in these systems right now. And so what we do at Coterie is we partner with companies who have these tools and services to get insurance through the software and tools that businesses already use. So we make it extremely simple for the business owner to, in some instances, literally getting insurance with a click of a button. Just include insurance, and it just goes through that system that you're already using.
Great. And why do you think that so many businesses are hesitant to? Let me put it this way: are people not getting insurance because the nature of the process being so complex, and this is just removes that first and probably biggest impediment to getting what they need to get?
Yeah, I think most of the time. So most of the time, insurance, most of the time, small businesses are insured, but there are a portion who aren't. And the big question is like, why aren't they getting insured? And largely, I think it's just a hassle, right? Like they have so many other things that they'd rather do, and small business owners especially. Like these people are hardworking people who they barely get to spend time with their family, and when they do, they probably don't want to think about insurance, right? Fact is, no one cares about insurance. Right? Insurance is not something that is readily on top of mind. And the funny thing is, like, insurance doesn't really matter until you realize that you don't have any. And oftentimes you realize you don't have any at the worst possible time. And so what we want to do is, by integrating with these systems and putting insurance right there and making it easy for people to get, we think we will increase the number of people who are ultimately getting insurance, and that will help them immensely when time comes when they realize that they need the insurance.
And in your bio, you mentioned that you were the head of insurance product and pricing at Clearcover. And I wonder what pricing lessons did you take from your experience there that you're applying to Coterie?
Yeah, I mean, my background is actuarial science, and actuaries, this is what we do. We price and assess risk. We quantify risk. And the name of the game in insurance is adequacy. And adequacy is a term that basically says if you are higher risk, you should be charged more money. If you are lower risk, you should be charged less money. And when we look at that and how we built that into what we do at Coterie, and this is pretty fundamental of how we do it, by hooking into the systems that businesses use, we can provide adequacy that simply other insurance companies can't. Because your policy, when you go through traditional agents, is going to be based off some estimate over the next 12 months, right? And who knows what's going to happen over the next 12 months? I think we're all kind of reeling from that, right? Whereas when we hook into the systems that the businesses run on, we can actually price based on the data that's coming through. So, let's say everything's going hunky-dory and, you're hitting your projections, but all of a sudden a pandemic hits and you don't have any business for 2 months, right? Well, your risk goes way down because you're not selling anything to any customers, right? You don't have people coming in or out of your store. And what we can do is we can leverage that data and be like, okay, well, we understand the risk that's coming through at your store nearly real time, right? Based on that data feed, and we can adjust that premium accordingly. And I think it's a pretty unique thing to us and to the products that we built. And I think it's going to do a lot of good for people.
Yeah, there's one actuarial axiom that I've learned, which is there's no such thing as a bad risk, just a bad premium.
Yeah, that's right. That's right. That's absolutely right.
And David, we have an exit question that we ask all of our guests, and that is, who is a hero of yours and why are they a hero?
Oh man, that's the one person who I've really been digging into recently. And like, you put anyone underneath close enough microscope, you realize they're not very heroic. But Charlie Munger is one. He's Warren Buffett's business partner. And the why behind that is Charlie is such a refreshing, has such a refreshing view on everything. So what he does is he breaks problems and scenarios down into these like very component parts and then analyzes them against like a lattice framework of mental models. And when he does that and he explains his thinking behind things, it really just helps you understand like how to see things in a totally new and almost elementary, like fundamental way. And this is particularly refreshing for someone like me who's an actuary who has been reading applied and pure mathematics and economic theory and all this stuff. And like we look at these things and it's chock full of like academia and assumptions and all these things that like make us feel really smart, like we're doing a good job. But then we have guys like Charlie Munger come in and just drop a bomb on us and say like, yeah, you're totally missing, the forest for the trees because you're not considering this, this, and this, and you're not challenging these assumptions. And it's neat to read about it and like how he can just come out and say these things that like make so much sense at a simple level. But then you see it in the real world too. Like we saw it in the 2007 subprime mortgage crash, where people just weren't, well, people were probably perversely incentivized to not think about the assumptions, but they weren't thinking about the assumptions. They just said like, oh yeah, the risks are, they're all independent, right? Like we all just assume everything's independent, but that's not the case. And what ended up happening is reality trumped theory. And guys like Charlie Munger definitely saw that coming a long time before it. And Charlie Munger's track record is pretty stellar in that respect. And so for those reasons, I have a lot of respect for Charlie and the wisdom that he shows.
And lastly, David, how can somebody contact you?
Yeah, you can get to us either by our website, coterieinsurance.com. You can reach out via email at david@coterieinsurance.com if you want to get in contact with me. And other than that, our customer service is open to chat as well if you need an insurance policy.
David McFarland, founder and CEO of Coterie Insurance. Thanks for being a guest on the Sage Advice podcast.
Thanks, Ed.
For more Sage Advice, visit and subscribe at sageadvicepodcast.com.